You've been through this many, many times before. What's interesting about this particular crisis this time, at this stage of it, is both leaders, if you see this in terms of U.S. versus Turkey, both leaders are piling on first. They still are not trying to contain this yet, are they?
No, they're not. In fact, they are raising the stakes. Erdogan's taking a very tough position, and Trump, as has been reported, is taking a tough position on escalating the tariffs on steel and aluminum for Turkey, which exports both of those, particularly steel. So this does create more problems, and I think that's what troubles the market so much. It's not just what's happened, it's the fact that the two leaders are not trying to work out something to dampen down the problem. They're, in fact, taking measures to exacerbate it.
And does it get worse before it gets better? I mean,
Yes.
You think somebody's going to blink, or how's this going to play out, do you think?
Well, I don't know. We're seeing this around the world. We're seeing it in terms of the confrontation between the United States and China on trade, where everyone seems to be escalating the process, and this seems to be the case as well. And this presents a problem. Also, it's a lesson, I think, in maintaining the independence of central banks. That one of the problems for Turkey is that Erdogan has expressed his distaste, in fact, his anger, at central bank rate increases, which in a normal situation for another country experiencing a collapse in its currency and high inflation would be the instrument of choice, raising rates. Erdogan wants them not to do this. So the management of the situation, along with the existing economic problems of heavy Turkish dependence on foreign capital and the probability that it won't get as much in the future and may see some exodus, has raised the problem now and for the future.
And Bob, that's what we've been trying to figure out, is exactly the contagion factor here and the spillover effect. We know that there will be some, but is this issue of what's going on with Turkey, and particularly the effect on the Turkish lira, more of a geopolitical instability problem than a risk to the financial markets?
Well, it's a great question. I mean, I think it just exacerbates a problem that has already been plaguing the market, and that is, as the dollar rises, and you've been pointing this out on the show, countries and companies that have large amounts of dollar debt find it more difficult to repay that dollar debt, to service that dollar debt. And that is true with many emerging markets. They're very leveraged in dollars, and this makes it even worse because it pushes the dollar up. It's pushed not only the Turkish lira down, but it's pushed down the euro as well. So this broadens and deepens the problem that many emerging countries have, and that presents a problem particularly not only for the companies that owe the dollar debt, but the banks that have lent them that money. And a lot of European banks are exposed, and that creates not only problems for the banks, but there's growing counterparty risks. So this does create a problem. The geopolitical issue is that Turkey is really the gateway for a lot of Syrian and other refugees. If their economy weakens, you'll see more refugees that have been staying in Turkey going to other parts of Europe if they can, and Turks going there, which creates more fodder for populists who are trying to destabilize current governments.